Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Thursday, October 14th. I'm your host, Jesse Allen. We are on the road again today. We are in Denver, Colorado. We are making our way across the fruited plain. We thank you for joining us here on the show, making us part of your day. MarketTalkAg.com is our home on the web. You can find us there, find all of our streaming sources and everything. It is all online, MarketTalkAg.com. Well, we had a fairly good day today. The grain markets found some buying late, and we finished higher across the board. Let's talk about all of it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here this afternoon. Bryan, good afternoon to you, sir. How are you?
I am great, and yeah, it's nice to see some green on the board today. We started out the week pretty rough, but yeah, things are dynamic. A lot of volatility today.
Yeah, a lot of volatility today. And, we look at the October WASD came out on Tuesday. We saw that downside pressure in quarter beans there. Yesterday, we saw pressure in corn and wheat and beans. And then we turn around today and we buy. And I know you kind of mentioned to me before we jumped on the air, felt like a little bit of a quote unquote risk on day. Talk about it a little bit.
Yeah, so you've got a big bump in the equities today, and lately we've been seeing, it looks like as the equities and energies move, so seems the commodity complex. So 500 point gain in the Dow Jones as the afternoon wears on. Looks like that's probably going to hold. I think the market has a little bit of a renewed sense of maybe purpose in that. I think some of this is the wording from the administration and from President Biden indicating that, they want to push toward getting these ports operational, moving, and stop these, or try and get through these log jams of millions of dollars a day wasted with ships circling, waiting to unload. It's no quick fix, but it was supportive. Lack of farmer selling in corn, I think, was also viewed as helpful. The recent pullback in prices had the brakes on many farmers selling. Um, Farmers aren't going to just give it away. This time of year, you need to kind of entice them. The market went from 497 in September on the September low after the supply and demand report to a high of 538. You get a nice push there of 40 cents. Some of the contracts a little higher than that. That'll bring some selling out. So I think we're range bound in corn. Export activity not really picking up in a big enough way, but we did see today another over 100,000 metric tons in soybeans, Jesse. And yesterday we saw a couple of big numbers. Rather large one from China, I think it was 320,000 metric tons, and about another 180,000 somewhere else. It was just under 20 million bushels total for a daily announcement. That's not the week cumulative, just the daily. So some nice numbers there, and beans rebounded today on the heels of actually meal moving up, which has been the real dog of the entire complex, gaining $2 to $3.50 today.
Well, you mentioned those soybean sales, and it sounds like there's some rumors out there. There could be some more export business. Maybe this is the opening we needed for demand to pick up. We get a little bit cheaper prices, and the Chinese specifically and others step back into our market. What do you think about that? Do you think this could be the sign of maybe some of our export business picking up, or is this maybe just an anomaly, so to speak?
Well, keep in mind China was on holiday, so you just don't come off a holiday and have all these, people go back to work at 8 o'clock in the Monday morning and buy a bunch of soybeans. This stuff takes a little bit of time, so we think they're back in the market buying. Um, I'm going to reiterate that I think the pace of buying looks much different than it did a year ago at this time. Things were cheap, and there was an opportunity to secure heavy inventories on a growing hog herd. Right now, you got a hog herd in China that's in theory already maxed or starting to decline because of poor margins. And you've got high priced beans and bean products, but the the overall sort of wet blanket over the bean market is just two reports in a row that had negative tones above expectations. You took the carryout number 60 days ago and double it to where we are today, more than doubled it. That's that's the dilemma in the beans to expect any kind of sustained rally right now. Harvest continues to plug along. Most are probably telling us their bean yields are a little better than they thought. So this idea of 50 plus bushels an acre probably has merit, at least on the feedback we've seen so far.
On the corn side, I know we got more friendly ethanol numbers today. Production increased from 978,000 to 1.032 million barrels per day last week. I'd have to think news like that is going to be a friendly piece of news to this corn market moving forward if we can continue on this pace, Brian.
Oh yes, and the ethanol is it's viable. You've got $80 crude oil, and although corn's at $5, remember a year ago corn was considerably less, but so was crude oil. In fact, we were coming out of a spring that had negative crude oil prices. Now those didn't last very long, but the crude oil took a long time to creep into the $40 area, and then 45 and 50, and all of a sudden here it's at 80. And talk well, La Nina winter could be colder for the U.S. and just all kinds of general supply concerns, energy concerns around the world. China has had some issues there, so that's the negative side of all this. These rolling blackouts in China, um, the need to actually, fire up more coal. They've been trying to, for safety reasons, reduce coal production out of certain plants, or did, weren't importing it enough from Australia. Political issues there. All of a sudden, China has some problems, and none of this is going to go away real quick. Even the Federal Reserve seemed to hint at maybe this. The Federal Reserve meetings and even Janet Yellen, maybe that, well, maybe this transitory inflation is going to take longer to get through um, than first thought. Um, some of us thought, well, that's yeah, who wasn't going to think that? So
Mhm.
anyway, um, uh, just a lot of dynamics going on. But the big thing with the I'm going to go back to the beans is the perception of big crop out of South America, more acres in Brazil and Argentina. Our yield here in the U.S. probably a little better than expected 30 days ago, and then the end user buying as needed and China's buying as needed. They've got some economic concerns that seem to rise daily. I just don't think we have that robust feel right now that we're going to see the end user come in and just scoop it all up. That's not the case this year.
So I wonder if I'm a producer rolling the combines right now and I have a better than expected bean yield. I maybe get some extra bushels from what I had planned for, or maybe I end up with some extra corn bushels that I hadn't planned for. I mean, what does that do to my marketing plan? Do those become those gambling bushels, so to speak? Do I sell those right off the combine? I mean, I feel like there's a lot of options that could be at play here if guys and gals are looking at their marketing plan here after this WASD report and where price levels sit at, Brian?
And the answer is yes. Yes, you should sell them. Yes, you should use them as gambling stocks because you got a little extra inventory and use them as a cushion, maybe in corn against what could be less acreage for next year because of fertilizer costs or dynamics of logistics trying to get fertilizer in the right place at the right time. It's all interesting. It gets a little bit more layered than that. What about my cash flow? Do I really want to generate income now, or do I push this sale off? But I think most farmers, when push comes to shove, even at these price levels, will sell the runover in soybeans and store the corn. Um, and they probably should because the fundamentals for beans look a little bit more to maybe a lot more scary. In particular, if Brazil and Argentina really push the acreage, and the U.S. ends up picking up 2 or 3, maybe 4 million acres because of lack of uh, incentive to grow corn unless corn prices really rally. Uh, Lots of dynamics. From a conservative viewpoint, I think you sell the overrun. These are good prices. It's good revenue per acre. You generate your cash flow. You don't have to own it in a bin. If you want to retain ownership, do something in the paper market, buy a futures if you want to directly participate like you would with it in the bin without basis risk. or without basis benefit, but without basis risk, or reinvest some of this in time value, buy some call options that get you out there several months, and now you're what we call standing in front of the market. You're not trying to outguess it. You sold cash, you got something bought back. You're just going to manage it if prices rally.
On the wheat market, we know that the global supplies are tightening, lack of quality milling wheat out there. It seems like wheat's trying its best to maybe price itself out of the feed bunk here, moving higher. What are your thoughts in this wheat market? Felt like we got back a good portion of what we lost yesterday here on Thursday.
Yeah, depends what contract you're looking at. The Minneapolis wheat absolutely did and pushed in new highs on December, so very encouraging there. The September Minneapolis wheat 819 right now, challenging its previous highs from last week. So you got some good things there over in Chicago. Um, Little ways to go. That market came under some heavy pressure, and it actually peaked back in mid August and trading about 50 cents off the high in the front months there. So you've got some real strong worldwide dynamics in the wheat market that we haven't seen in a long time. You may be looking at the lowest stocks to usage number in probably 8 years. Um, Russia, how much wheat they actually have available for export. We were doing a little homework today. We learned they harvested in bulk and then they cleaned it, so you lose about in the area I think of 5% when you actually do the cleaning process, which is something that's a little different than here. So it doesn't look like Russia's going to have much, if any, exportable wheat from this point moving forward. And um, still trying to figure out what they've got for crop size. They're about 95% harvested.
Brian, I want to talk about the dairy market. I know you fielded quite a few calls about that here today from producers. Get us up to speed on what we saw in the dairy market here today.
Yeah, you saw an continuation of some really good strength, and we saw our highest prices in multiple months. So the November milk contract reached a high today of 1957, closing at 1932. Um, so the high today, 1957. We haven't seen that price since the market peaked at 1957 back on May 12th. So you got a big double top on the November no contract there. The December contract looks very similar. It didn't quite hit the level that it was last May, and that was a spike day up as well. But you've got a whole combination of things that seem to be sort of coming together at one time. First of all, there was a fire at a Dairy Gold plant in Caldwell, Idaho. Said to have burned in the plant of the powdered milk and not the butter, but butter went skyrocketing today anyway. So you've got all this sort of pre-holiday buying that's really, I think, hitting at one time. And I'm wondering if the sharp rally that is, you take a look at something like the December contract. Jesse was straight 1705 on September 23rd, and then today's high 1905. So got a $2 rally in a very short window of time. Maybe a growing reality that uh, if you're not buying the product now for as a commercial firm to turn this into holiday type treats and food, um, you might have to pay a lot more. Same things, logistical issues. So we're you can connect a lot of dots on why the market is higher. It's higher in good demand. Well, why is there such good demand? Well, there's two things there. One, pre-buying. The other thing is demand based on maybe worries about tighter supply. That is starting to reduce the cow herd. Now, maybe not after today, but it's a labor issue. A lot of these big dairies are we hear the story over and over and over again, having to deal with labor shortages, and there could be cutback. I talked to one dairy producer that this afternoon. He said we might just go from 3 times a day back down to two. We're short on labor. We don't have anybody knocking at our door. Normally, we have people knocking at our door. Another large dairy that we talked to today, 3,000 cow dairy. They're not going to do at least this time, but they had plans to go down to 2,000. Jesse. So this is a big labor issue, and that's not going to go away real quick either.
Brian, let's touch on the livestock market as well today. Cattle higher, hogs under a little pressure. Any thoughts from livestock here on Thursday?
It's nice to see the cattle market rebound to where, one thinks maybe we should be, if not a little bit higher, because we had that big uptrend into late August and then kind of hit the wall and fell down. And we're starting to see some good strength, some nice inverted head and shoulders formations. You're seeing things there that would argue that the market is beginning to get its legs under it. Um, I probably worry about just the service sector and lack of labor and restaurants and things like that if you're going to really get strong demand. Um, it's just anecdotal, but my wife and I went to a restaurant last night. I won't say the name. They didn't have tomatoes, and then they didn't have this, and they didn't have that, and we ended up not buying anything at this restaurant. And there was a line of people behind us. So it wasn't a high end, but it's one of these that. Um, so you kind of wonder what that looks like in the long run. Um, on the other hand, um, again, higher price corn, cattle producers will stay close to the knife. I think what hindered the cattle market last month was the reality that because of drier conditions, in general, the feedlots were in great shape. Cattle gained at a very rapid pace. I've never talked to so many people who had such good gain on cattle. So we'll get through these inventory numbers. Typically, the market bottoms in the fall, moves higher. I think the back months have it right. So we're going to stay with a bias that back months can move back into the 140 area. That means April. April right now about 137 and a half. Feeder cattle market. Um, Despite a little turnaround corn prices moved higher today, I think the feeder market has a good level of support where it's at. Probably not a lot of distance to go higher, but well supported there. And the hog market was the recipient of traders buying cattle, selling hogs today. I think that was the only thing I can come up with why hogs didn't participate.
Well, Brian, great stuff as always. Any other final thoughts you have for us? Anything you want to reiterate on this Thursday?
Well, thank you for the opportunity. First of all, Jesse, and second is just to reiterate to everybody working so hard out there. Get rest, keep it safe. Um, Waste is often a and so when we see haste, that leads to things. So just take it easy is my point. The work will get done. Um, the markets are dynamic. Stay in touch with your advisor. Make sure that you're keeping an eye on all of the opportunities that are out there, and spend a little time. Brush off your old paperwork. Understand how to use options and sell options, and if not, ask people that can answer those questions so you don't waste a lot of time at it. So that's it. Stay safe and stay vigilant for opportunity.
Well, I know if producers need a little advice, they can reach out to you and the team there at Total Farm Marketing as well to get that advice simply with a phone call, can't they, Brian?
Yeah, that's the best way to do that. 800-334-9779. Just give it a quick buzz, and we'll make sure that we try and bring value to the conversation and listen well, and then if we can provide it some type of solution for you.
And you can also find them totalfarmmarketing.com. Brian, I appreciate the time as always, sir. Have a great weekend. We'll talk to you next week.
Jesse, my pleasure. Thank you again.
Brian Doherty with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the Thursday, October 14th edition of the show. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.